The task is not to see what no one else sees, but to think what no one else has thought about that which everybody sees.
No one's coming to save you. Your financial destiny's in your own hands and in your own decisions.
You actually have to stay physically fit because it gives you confidence.
That self-confidence leads over into all the different things you do.
Being both mentally strong and physically strong are both linked together. Money printing doesn't create wealth. Wealth is created by all your hard work.
Take confidence and be excited about that.
If something doesn't make sense, stop believing it's true. And if you see that it doesn't make sense, don't be gaslit into believing that it does make sense.
When your window of opportunity opens, will you be ready?
Welcome to the Catch Window podcast. Who do we have the honor of being blessed with today?
Chris Galizio. I'm a former large cap growth manager at Fidelity. I ran a hedge fund called Focus Capital. I wrote a white paper recently about the $340 trillion problem that I think we're all dealing with, which is the debt in the system, which is kind of unstable. And then I decided to make a movie about it called Money Game, which we just released in March, and we've won 6 Best Film Awards from Boston International, New York International, DC International. So I'm kind of excited to talk about it.
Heck yeah. All right, guys, we got a professional on our hands here. So for the new viewers, right, the Catch Window podcast is all about two worlds kind of colliding, right? In the sports world for football, whether you're a receiver or a running back, right? Catch Window is an opportunity to play on the ball, whether it's for a touchdown or a big gain, the game that you're playing. And I feel like it's very similar in the world of business and money management, right? There are windows of opportunity that can be seized. People miss these opportunities for various reasons, whether it's not being mentally, physically, or financially prepared, or just not being ready to seize the moment that's in front of them. We obviously have someone with us today that did just the opposite of that, seize the moments and have been successful. And so we're here to kind of learn a little bit more from Chris. Chris, thanks for coming on.
Thanks for having me, Megan.
Yeah, of course, of course. And, first thing I always like to ask, Chris, there is an opportunity, there's business, whether it's an ability to raise capital on the table. What would you say is the main factor in being able to actually seize that and make the most of the opportunity?
So stop listening to anyone else. Listen to yourself. Be confident. The end of Money Game, which is the movie I just made, see a lion? That's you. We believe the market is no longer thinking. And you have an opportunity today, if you think for yourself and see what you see, because I believe that the market has completely shifted from people making decisions to a bunch of bots. It's all passive and quant now. And if you see an opportunity, believe in yourself and take advantage of it. There's never been a better time because you're basically competing against a bunch of dumb bots today.
Man, powerful stuff. I love that. Love that, man. The lion. Woo! Man, I love that symbolism. What went behind one deciding that?
Sure. So throughout Money Game, you're going to see all the animals from the ecosystem, because the point of the movie is that when the Fed intervened in bond markets, quantitative easing, they broke the ecosystem. So what we tried to do is we tried to add a bunch of symbolism into the movie. So you're going to see the lion, which is active managers, which are basically extinct. You're going to see a rhino. It's in rhino coin. It's gold, and it's not quite a dinosaur yet, right? You're going to see algorithms, which is wildebeest. You're going to see cheetah coin, which represents crypto. The one animal you'll never see in Money Game is the elephant in the room. It's the elephant, because our lead character, James, who's the real economy. So the point of the movie is that the entire system is broken and misallocating resources, which slows the real economy, which is our lead character, James.
Man, that is so awesome. Wow. When it comes to becoming the lion, being the lion in this new arena and how the game is now played, what would you say goes into that? Like, what is the composure or the mentality someone needs to have to succeed in that?
So stop chasing the market. The market isn't the leader, isn't the master. You are. You're the only one that matters. When you're making a decision on a stock, you're the only one that matters. The market doesn't matter. So if you're looking at a stock saying, hey, this is 3 times earnings, I'm going to yield of 33%. So you flip it 1 divided by 3. 3 times earnings is basically building in an internal rate of around 33%. If you see that, I believe that market's completely broken. In Money Game, we talk about it as it's a bunch of, the lions have been eaten of managers. It's a bunch of followers, quant, following followers, passive. It's like a cat chasing its tail. So if you once you understand that there's no price discovery in markets anymore, all that's happening today, Fed prints money, flows to the index goes up. The reason we came up with Money Game was because we wanted to create lions. So once you understand that there's no one else thinking out there, if no one else is thinking, then if you think you essentially have a crystal ball. right? Because nobody's thinking. So stop believing that the market is pricing in companies like Palantir or Tesla. What you're seeing doesn't make sense, right? The opening quote in Money Game is, the task is not to see what no one else sees, but to think what no one else has thought about that which everybody sees. Because everyone's seeing companies like Tesla trading at $1.4 trillion. That is a massive number. Now, Tesla, I believe, earned about 1.4 billion last year. So think about it. 1.4 trades at 1.4 trillion. That's 1,000 years. So would you really invest? Would you really buy a company that you're going to get your money back in 1,000 years? You'd laugh at me and say no. Well, then don't buy it, right? Another example of that is a company like Boeing. Boeing has lost 10 billion every year since 2017. It's like negative 10 billion, negative 10 billion, negative. If I asked a 10-year-old, how much would you pay for the right to lose 10 billion a year? The 10-year-old would laugh at you and say zero. Be confident that is the right answer. Do whatever these hedge fund managers, because they don't understand it. The hedge fund managers and the portfolio managers themselves are stuck in groupthink. Professor Gardner will raise the book, The Efficient Market Thesis. He laughs. He throws it in the trash. He says smart people thought the world was flat once too. Markets are not efficiently priced today. Markets, most of stocks don't make sense, but there's certain stocks out there that make enormous sense. So be your own person, be your own man, and that comes back to athleticism. Like, I mean, if you're running back and you see a hole, you have to just believe it at that time, say, boom, that's my hole, gone, take it. So that's my advice to you guys.
100%. I love that. I love that parallel too. And it's funny that you said that. That's exactly where my mind was going when you were saying that. And I love using the lion as that symbolism, right? The boldness, the courage, and even a little bit of that ferocity, knowing that this is the right move, this is the right decision, and kind of going for it. And it's so much parallels in sports performance and physical preparation in general of understanding that this is the right way. I'm going to do it this way, and being able to see so far beyond what the common thing is, or the thing that everyone else is going with, and being able to say, most people may think this, most people may go with this, but this is the right way, and I'm gonna go for it 100%.
And once you realize that it's not even people anymore, you're competing against bots. So they're pricing stocks that don't make sense. So you do think. I have a company that's reporting today is Nexa Resources, a $1.5 billion company. They produce about 11 million ounces of silver a year. 11 million ounces, silver prices are around 100. So that's 1.1 billion, and that's a credit they get for that. It's a byproduct resource. Most of what they produce is copper and lead and zinc and stuff like that. So silver's a byproduct. So think about $100 times 11 million units. That's 1.1 billion. That should fall right to the bottom line. That's profit. Stock trades at 1.5. So if you see it, stop believing that the market is pricing it, because it isn't. When you see things like that, take advantage, buy them. So all I'm trying to do is give you guys the confidence to, when you see something, stop believing that other people know more than you do. Stop believing that the market's pricing it. In Money Game, you're going to keep seeing James is the lead character. He represents the real economy. Bryson is the villain in the movie. Bryson's the CEO of the next big thing. It's like Snapchat, TikTok, all these companies that lose money. James keeps asking Bryson, he says, how does your company make money? And the answer is his company doesn't make money, right? 35% of the S&P 500 are zombie corps. So what's the value of a company that doesn't make money? The answer is zero. So James isn't asking Bryson, how's your company make money? What he's asking is the audience, how long will you tolerate a system built on lies? Like, think of all the lies we're seeing in the markets. We have $38 trillion in debt. All of finance is based on the fact that debt is risk-free. If your Uncle Sam owed you $38 trillion, is that risk-free? And the answer is no, it's not, because they're taking it through inflation. So they've built all of finance starting with the lie that bonds are risk-free. Bonds are not risk-free. They're just taking it from you through inflation.
Wow, man, that is powerful. As people take on this new perspective of understanding what's really going on, what would you say is kind of the mentality you need to have to really navigate this arena, having this truth and wanting to make the most out of this? Like, what is that mentality that someone needs to have in order to be successful in this?
So stop using price to dictate everything. Throughout history, they've used price, and they've manipulated prices. And here we are again manipulating prices. QE by itself is manipulating the bond rates, right? That's the money game. Think about this. And we talk about this in the movie. All of finance is based on one formula, the value of $1 paid annually. If interest rate, and all you need is that, the only thing you need is interest rates. Okay, so if $1 paid annually, what's it worth? Well, if interest rates are 10%, it's 1 divided by 10%, $10. If interest rates fall to 1%, now it's $100. If interest rates go negative, all assets are worth infinite, right? In the movie, he says, my coffee is worth infinite. My desk is worth infinite. My whiteboard is worth infinite. Does that make sense? And of course, it doesn't make sense. It's because they're manipulating interest rates, right? So in Money Game, we use interest rates at the time of the movie. We should be using real rates, not nominal rates, right? But even at the time of the movie, interest rates were 0.66%. So it's 1 divided by 0.66. Professor Gardner says, who here would give me $152? It's 1 divided by 0.66 if I give you $1 every year for the rest of your life. Dumbest kid in the class stands up and says, hell no, we'd all be dead by the time we broke even. Professor Gardner says, correct. In other words, don't buy it. Why would you pay $152 if you're never going to get paid back? And that comes back to Tesla or Boeing or all these companies that lose money. Those companies, in fact, so the tagline of Money Game is don't get played. Why? Because you're not investing in these companies. You're providing the financing. Right? Boeing doesn't make its money from selling planes. It makes its money from selling shares. You should watch the share count go up every year. Right? They have a tremendous amount of debt. Their shareholder capital is negative. But it's not just Boeing. It's 35% of the S&P. And so I believe what's happening in this system, when the Fed intervened in bond markets, they broke the ecosystem of capitalism, which is, by the way, the biggest quote in the entire movie. Professor Gardner, the theme of the movie is capitalism requires risk to allocate scarce resources. And Professor Gardner will say, what would happen if we remove risk from capitalism, quantitative easing? One of the students will say, well, the gazelle population, passive investing, would explode, right? Right now, passive is 80% of the market. Between passive and quant, it's probably 85, 86% of the market. Then the next student says, but then they'd be competing for scarce water resources and die off. Inflation. Professor Gardner says correct. And when the Fed intervened in bond markets, they broke the ecosystem of capitalism. This is no longer capitalism, right? Capitalism requires risk. So if they're intervening in markets, changing price discovery, then it's not capitalism. And so what you're now doing is you're getting played to provide the financing. And by the way, the entire globe is getting played to provide the financing for U.S. business. And that is a pretty big topic. That's why I made the movie.
Wow, that is a serious topic, and it's something that obviously most don't know. When you talk about kind of like even just your past successes and the things you've learned over time and the success you had with your own hedge fund, when it comes to like whether it's clientele or just getting this information out and teaching people, how would you go about that?
You know what? The system right now is a sales system. So think about everything they do. There's these factors, right? There's 10 factors that are being used. There's ESG. All these things that don't seem to make any sense from a capitalist perspective. A capitalist, all I want to do is say, okay, I'm going to invest $1 million. How quickly do I get my money back? That's capitalism. I don't know what ESG has anything to do with that, right? I don't know what factors have anything to do with that. By the way, they're also telling you should diversify, right, across every sector. Why? Because it's a financing system, right? So they want you to finance the entire economy. They don't want you just to finance certain sectors, which get Warren Buffett would tell you, if you have all you really need is 8 to 10 stocks. I don't necessarily believe that, but I do believe that all you really need is 30 to 50 at the most, right? So stop getting played and investing in passive or quant. Once you understand the markets are broken, you're basically holding a crystal ball because everyone else believes that markets are efficient. So if you don't and you're seeing something, believe what you see and take advantage of it.
Wow. Yeah, that's good. That is so good. Yeah, man. I mean, I think of all the knowledge that you've kind of laid out, and there's obviously so many people who just aren't aware and don't know. And back to kind of like I always talk about that window of opportunity in business. Like when you think about everything that you now know and how most people invest and look at investing and everything like that, how would you describe, I guess, that window? Would you say it's a small window of opportunity? Would you say it's a great window of opportunity? How do people miss this window based off, all the knowledge you have?
So on the one hand, they've been manipulating interest rates. So I would have argued that in 2008, you were living in a capitalist system, right? Then we had the financial crisis. They stepped in with all this quantitative easing, which they've continued on. I remember in 2019, the repo market spiked. Interest rates went from 2% to 10%, right? And so we actually talk about that in the movie, that the Fed stepped in and they bought every single bond. Because if interest rates really did go from 2% to 10%, stock market should be down 80%. And they couldn't allow that to happen. So they stepped in. So everything was, prices went through the moon. So the companies like Snapchat or TikTok or whatever they were went to the moon. Tesla, right? There's another side of that market though, which is companies like the silver stocks is a perfect example, right? So they're manipulating price discovery on bonds, which by the way, in the movie we'll say stocks, bonds, and cash are all massive bubbles. Notice cash. How can cash be a bubble? Because cash is a derivative of bonds. If the bonds aren't payable, then your cash is worthless. So what money game really is a sovereign debt crisis, because the crises keep getting bigger and bigger, right? In 1998, we had the tech crisis, small little sector. In 2008, we had the financial crisis, much bigger thing. Now we're at the sovereign debt level. One of the quotes from the movie is, when the government assumes all the risk, it's the currency that's at risk. It reminds me of a scene from Superman. Lois falls out the window. Superman dives down and saves her and says, "I've got you." And Lois says, "Yeah, but who has you?" In other words, what are you backed by? Is the government isn't backed by anything. And so they not only were they manipulating interest rates, but they were also manipulating gold and silver prices. So they manipulated silver prices all the way down to $12. Now notice that silver prices have popped. Now they're at 90. Why? Because we're getting a repricing. China actually we're in a financial war between us and China. And China is basically wants to reprice all these things like silver. So what they do is they cut off exports of all silver, which by the way is 70% of the world's exports. So now COMEX has been working off of a fractional reserve currency status. In other words, they're hoping that most people won't ask for their silver. But if everyone asks for their silver at the exact same time, they can't deliver it. It's the same as our banking system, right? So what we're really trying to point out is that you're in a sovereign debt crisis. During a sovereign debt crisis, governments manipulate interest rates, but the currency gets impacted and you cause tremendous amount of inflation. So what you should be buying in a situation like this is real assets. And it doesn't matter, shipping, gold, silver, copper, oil, but real assets. And by the way, real assets are at 120-year low. Another thing we point out in the movie is that during COVID, unemployment hit 33% and stocks went up. That has never happened in history. Why? It was easy money from the Fed. Fed started printing money like crazy. Money supply went from $16 trillion to $21 trillion in a year. And that's what sent the stocks up. But that also shows a manipulation. So the entire system's being manipulated. You're in a sovereign debt crisis. You should be buying hard assets.
That's, man, the insight is just next level. And I think of, just based on everything you're saying, I mean, when we look at how business is done, especially from the money management standpoint, how do you feel like people should go about that, just based off this, obviously how this stuff really works, people who are just
100%.
realizing this?
So most people use the 60-40. They use 60% bonds. I'm sorry, 60% stocks, 40% bonds, right? The 40% bonds, if you know that debt is not payable, which it isn't, that's the $340 trillion white paper that I wrote, right? Debt's unpayable. If debt's unpayable, well, that money has to flow. So think about the sizes of the market. If the bond market's 340 trillion, the stock market's 100 trillion, all that money has to flow into something. If you know the bond that 340 is unpayable, then you have to buy something below it, whether it be stocks, which is now in a bubble, and then you go into gold, which is probably 20 trillion. Then you go into Bitcoin, which is probably 4 trillion, and then silver is about 1 trillion. So all that money has to flow into the lower parts, and that's why I think you're about to see explosion of real assets. It's basically Weimar. The U.S. is so Germany lost World War I. In 1922 or 1923, the French were looking for reparations. They wanted to get the reparation from the Germans. So they sent into Ruhr Valley, which is where the industrial part of Germany is, and they basically seized it. The workers basically quit because they said, well, we're not going to work if we're being invaded. And so the German Reichsbank continued to pay the employees. Where'd they get the money? They printed it. So, and that's what caused the eventual devaluation of the Reichsmark, of the mark, right? We're seeing the same type of situation today. The U.S. has tremendous amounts of debt. We had COVID, they printed money. We have 38 trillion in debt and then 100 more in entitlements. And so that's kind of like the reparations from Germany from 1923. So that's why I think we're in a sovereign debt crisis. The second biggest quote in the movie, Professor Gardner is going to say, von Havenstein, the head of the German central bank, had a choice: print the money or trigger the revolution. And that's the situation that I think we're in now. Once the Fed stepped in to quantitative easing, it's like a Hotel California. They can never leave. They can step in anytime they want, but they can never leave. So they're going to have to print the money or trigger the revolution. And when they print the money, it's going to devalue the dollar and send hard assets up.
That is so amazing. And I feel like the movie conveys so much of this. I even like the aspect of the movie that takes place during COVID. And I know you mentioned COVID a little bit and about, the impacts that it kind of had on the stocks and everything. Do you feel like, I mean, just based off the movie in this setting, do you feel like, mental, physical health, even financial health, right? Like, and I think of financial, I think of kind of like knowledge, right? Like the knowledge of how it works. Do you feel like that kind of impacts people's outlook on this stuff and how they manage the money in stocks?
100%. You actually have to stay physically fit because it gives you confidence. And this is the time that you need the confidence, right? I mean, it's just for yourself, for your own well-being, but you have to stay in shape. You have to feel confident that no matter what decisions you make, and there's a lot of them that are really going to impact your life these days, that being both mentally strong and physically strong are both linked together. No question.
I love that. I love that tie, especially the mental and acuity and focus. I think that comes with that, and I love that. I love that tie into confidence. I haven't really thought about it that way. The way that self confidence leads over into all the different things you do, and just based off just what you've been saying, right? I think a lot of this takes a lot of self confidence, understanding like you're in a race against bots. So this is no longer you
Correct.
versus other people, other humans, right? This is where you have the advantage to use your own mind to trust what you see and go with it. I think that's super powerful.
You have to understand the bots aren't thinking. Once you understand that the rest of the market isn't thinking, you hold a crystal ball.
Wow.
You're one of the few people out there that's thinking. Everyone else, if you look at Bill Ackman, he's the big hedge fund manager in New York. They all believe markets are efficient. So I would say shift your lens. Stop believing that someone else is pricing it. The only one that matters is what you and what you buy. Forget about the market. By the way, that's speculation. If you're hoping someone else is going to buy it behind you, well, that's speculation. You're not investing anymore. You're speculating. Look for cash flows that are mispriced. Again, from the movie, Professor Gardner's first thing he says, finance is the simplest subject you've ever learned. There's nothing easier than finance. It's based on one formula: the value of a dollar paid annually. It's 1 divided by interest rate. So if a company earns $1 billion, let's do Tesla. Tesla earned 1.4 billion. We know there's some issues around Tesla in terms of they're losing their subsidies. So I would argue that and you're also seeing all the other companies get rid of EVs because they're saying they're not profitable. So they lost their subsidies. If they earned 1.4 last year, let's just assume it's only 1 billion. So what's Tesla worth? Let's say if we put a 10% interest rate on it, it's 1 billion divided by 10%, it's 10 billion. That's what it's worth. It's not worth 1.4 trillion. The rest is all just made up. I think what you're seeing is it's narrative, right? I think people are just building a narrative. And I also think think about this. This is maybe a little bit hard to understand for most people. I think what's happening is everything is working opposite of fundamentals. Price are working off. If you talk to Grok, and I've done this, or ChatGPT, if you say, let's just assume 100% of the market is passive, 100%. If a company issued shares and the share count went from 100 million to 110 million, wouldn't that force the passives to buy at the quarter? And Grok will come back and say yes, because they have to match the index. So I believe what's happening is companies like Tesla are issuing shares, which is forcing the passives to buy and sending this at the quarter, which sends the stock price up. It's not because they're beating expectations. It's because they're issuing shares. So stocks are moving right now, in my belief, for the wrong reasons. It's a financing system. They're going up because they need capital, right? And so the reverse is also true. If a company buys back shares, say the share count went from 100 million to 90, would force the passives to sell at the quarter. So everything's working opposite of fundamentals, in my view. The closing quote in Money Game from Professor Gardner. So every character has to have an arc. So he starts out as a community college professor. Nobody's listening to him. He ends up running the Money Game podcast when he has millions of listeners. And his final quote in the movie, "Our system's broken. It's clear now that money printing sends asset prices up. What's less clear is it also slows the real economy as we misallocate resources." Now we have two different economies, the financial economy and real economy, that no longer work together. Money printing doesn't create wealth. Wealth is created by all your hard work. So I believe everything's working in reverse of fundamentals. And that's why it's more important than ever to take control of your own financial destiny. Get rid of these financial gurus or these people who don't, because they're all salespeople. There's no fiduciaries anymore in markets. All you are is more income for them, right? So there's no fiduciary that would pay $1.4 trillion for Tesla. There's no fiduciary out there because there's no way to get your money back. Right. So I would argue take command of your own financial situation and stop listening to all the sell side and the brokers and all this other stuff.
Jeez. Woo. Man, that is awesome. Well, just everything you're saying, especially now, just I think all this truth that's being dropped. And I think of like all the listeners, all the people out there, the younger people getting into whether a similar, profession like yourself or just wanting to kind of take control of their finances, like what you're saying. What do you think they should focus on more? Should they focus on strategy? Should they focus on, kind of like we mentioned, more of their, physical performance, like getting your body, your mind, getting all these things in alignment, or is it some combination of both? What would you say to that?
Definitely a combination of both. You actually have to get out there and sweat. I mean, I think the athletes are the best people to hire because they've been through it. Every one of them has been rejected. Every single one of them. Michael Jordan got cut from his basketball team as a sophomore. Right. Tom Brady was a 6th round pick. Right. So don't ever believe that you're done or you're too old or whatever else. Just do it. Just have the confidence in yourself. Stop believing all the consultants. Stop believing all the experts. Stop believing any of these institutions because you keep seeing that they're not competent. Right. All these. So just you have to take your financial reins for yourself and think for yourself and make your own decisions. Part of that is just working out, sweating, grinding. It's everything you've learned as an athlete throughout life to make yourself a better person.
That's good stuff.
That's what sports really teach you, is to how to be a better person.
100%. I love that. I can relate to that, man. Getting up early when you don't feel like it, working late when you don't feel like it. All this work, for just one moment, one game, all the preparation that goes into that. I 100% agree. The kind of mental toughness, physical toughness that it builds. I mean, it prepares you for exactly what you're saying. Something like this where you got to really understand that no one's coming to save you. Your financial destiny's in your own hands and in your own decisions. And take confidence and be excited about that and take control of that. I think is super amazing. Powerful stuff, really is. Man, I think about everything you're saying and just like this wealth of knowledge that you now have with your outlook and the things that are on your horizon. Do you have any, I guess, big goals or big objectives, big things you're looking to continue to grow in or accomplish? Um,
I mean, so I'm working on a couple of financing deals. I still do kind of investment banking on the side. And so I'm working on a couple of big financing deals to then go ahead and build some projects. So I've met some people, I've developed some connections. And so now what I'm trying to do is I'm trying to get into gold projects or silver projects or oil projects. And it's a lot of private equity or it's a lot of private, you go into a bank to try to raise capital. So that's what I'm trying to do. I go directly to the bank and try to build a business myself. So I'm
wow,
not relying on the markets as much as I used to.
wow, that's powerful stuff. And what are some of the obstacles, as best as you can describe it, when you're building your own capital and you're building these projects out?
I mean, what I'm doing is I'm going through banks. Right now, I'm working with Commerce Bank to try to raise money, and it's just so much stuff to fill out. I mean, what I do is I built a bunch of spreadsheets. First of all, I had to identify projects, then calculate what types of returns they would be. I did about 6 of them. And then I presented them to Commerce Bank, and they said yes. And now we're working on some terms of the deal and trying to close all the paperwork and stuff like that. But that's where we are. So we'll see if all this stuff goes through. But what it was just believing in myself, believing I had great projects, and believing that someone else helped me finance it. And that's the process I'm going through.
I love that, man. Awesome. Well, Chris, what's one more word of advice, wisdom you would leave, but kind of just, all of us, all the listeners, all the viewers, younger generation?
I mean, the biggest thing for me is be confident. And what you're seeing really is crazy, right? The stuff you're seeing in markets doesn't make sense. If something doesn't make sense, stop believing it's true. I've shifted all of my intake in terms of media and stuff like that away from mainstream, because the mainstream, I believe, is propaganda. I think you're seeing it propaganda in every aspect of our lives. So I've shifted to YouTube. I get different sources of where I get my information. And at the end of the day, I just believe in myself. I see what I see. If you remember in Money Game, the professor turned to the student and said, "Who here is willing to give me $152 if I give you $1 the rest of your life?" Even a community college student could see that didn't make sense. And if you see that it doesn't make sense, don't be gaslit into believing that it does make sense. Like, some things don't make sense in markets. And so you actually just have to be your own person and think for yourself. There's never been a better time to think for yourself.
Wow. Brilliant stuff. That's true freedom right there. Wow. Man, Chris, I appreciate all this wealth of knowledge. I mean, it's insanely valuable knowledge, especially in this world. If any of the listeners, viewers wanted to see more of what you do, find a place where they can listen to more of the stuff that you say, where's the best place to do that?
I mean, you can contact me on LinkedIn. I'm there. It's Chris, Chris. Last name's Galizio. I'm on LinkedIn. If you ever want to connect, you want to ask questions, I'm there. You can also find Money Game on Tubi, on Amazon. Again, we won 6 Best Film Awards. It's hard to win Best Film Awards, and we won 6. So I think it's a topic that's important. And by the way, it's a love story at the end of the day. So it's a fun movie. We've gotten a lot of positive accolades, and so I guess that's where you can find me.
Awesome. Great. Appreciate your time, Chris. Thank you so much.
Anytime, Moga. Thanks for having me.
Oh, yes.